Hi and welcome to this special episode of Market Talk, where we will talk about the candlesticks, the candlestick formations, what they might mean, and how you could interpret and use them when trying to make sense of the market sentiment and the market moves, and also making your trading decisions. So welcome again to this special and educative episode of Market Talk on understanding candlesticks. Why candlesticks? Well, I'm going to talk about candlesticks because people from our audience asked me to have a conversation on this subject. So we actually decided to prepare a special episode for you guys. But before we go, if you have any subjects that come to your mind that you would like us to cover, it could be anything technical or about fundamental analysis. Please do not hesitate to shout out to us and ask. For the fundamental analysis, actually, I prefer blending them into my regular Market Talk episodes on a daily basis. But for the technical analysis, I actually love it better to have a separate talk to actually make sure that it doesn't interfere with the flow of the daily market talks that have a lot of subjects in them already. Now back to the candlesticks. A candlestick is nothing else than the sticks that you actually see on your trading charts. It is simply a visual representation of price movements within a specific time frame. So if you are on an hourly price chart, every candle that you will see there would represent an hour. If you are on a daily price chart, every candle that you will see represents a day. And if you're on a weekly price chart, well, every candle that you will see there represents a week, and so on. So what's quite cool about these candlesticks is that each of these candlesticks actually tells this story of how the price opens that time frame. So it could be that minute, that hour, or that day. The highest and the lowest price levels that have been reached during that period of time, and also how the period closed. So with a single glance to a candlestick, you can tell a lot about the sentiment, what happened, appetite, hesitations, and also potential price reversals. So zooming into a candlestick, the body that you see there represents the range between the opening and closing prices of that period of time, and the extremes that you see there are the highest and the lowest price levels that have been reached. So it's very straightforward indeed. Plus the candlesticks have a color, so you can have them in different colors on different trading platforms, but on my price charts they are actually green or red. So a green candlestick, also called a bullish candle, means that the price closed higher than it started. It opened a specific period of time. It means that the price went up during that period simply. While a red candle, which is also called a bearish candle, means that the price of an asset closed lower than it opened a given period. So the price went down during that period. It's as simple as that. Is very straightforward as well. But the candles can actually tell us much more than that. They can eventually give us an idea, an opinion on a pattern, and help us predict where the market could be headed next. A thing that every trader is trying to guess all the time, right? So among the most famous candlestick patterns and formations comes a hammer candlestick. So this is a single candlestick pattern, mind you. It is a bullish reversal pattern that often appears after a downtrend. So it's quite easy to recognize a hammer candlestick simply because, as its name suggests, it does look like a hammer. It's got a long lower wick, and it shows that the price has quickly rebounded after hitting a low level. Quickly, obviously, depending on your time frame, right? An hour, a day, or a week, but quickly depending on your time frame. But yes, it means that the price didn't want to consolidate at low levels and it rebounded quickly. As such, a hammer candlestick could signal a potential support level, a dip level, and the possibility of a price rebound. Conversely, we have the shooting star pattern, the shooting star formation, which is the opposite of the hammer candlestick. I think it looks less actually like a shooting star, that the hammer formation looks like a hammer, but a shooting star candlestick here is characterized by a long upper wick and tells that the price of an asset has quickly retreated after hitting a high during that period, and that gives us an indication that the price didn't want to consolidate at relatively high levels and it came back quickly down. So as such, it could indicate a potential top formation and the possibility of a further downside correction in price. So these are the examples of single candlestick patterns. Another example for the single candlestick pattern category could be a doji candlestick formation, which actually refers to a candle with identical opening and closing prices. And this formation hence at hesitation or a trend reversal if it happens to be on the extremes of a price chart, for example. Then you have multi-candle patterns, for example, which refers to formations that include two or more candlesticks at a time. Among them, we have one of these most popular ones, that is a bullish engulfing pattern. So this bullish engulfing pattern refers to two candlesticks that follow each other on a chart where a green candlestick fully covers a prior red one. So it is often seen as a signal for a strong upward momentum. And conversely, a bearish engulfing pattern, it refers to two candlesticks that also follow each other where a red candlestick fully covers a green one, and this one obviously suggests a potential downward move. Then you have three candlestick patterns. We are getting complicated, like the morning star formation, for example, where a bearish candlestick, a small bodied candlestick, and a bullish candlestick follow each other, and this formation suggests a bullish reversal in price. And the evening star formation, where a bullish candle, a small bodied candle, and a bearish candlestick follow each other, and here to hint at a possible bearish reversal. Then you have continuation patterns, you have Harami patterns. I mean, you get it. You could observe many price patterns on your trading charts and try to make sense of them. And with practice, you get better at recognizing and naming these trading patterns. But to me, what is more interesting here is to combine them with other technical indicators like moving averages, for example, or psychological support and resistance levels, Fibonacci levels, and put them into a fundamental context even to find a strong or stronger conviction about a trade and or your stop loss and take profit decisions. And as with all technical indicators out there, the candlestick patterns, the candlestick formations that you see are not rocket science, right? They help traders gain context and make more informed guesses about their trading decisions, about where the prices could be headed next, but they never ever guarantee a potential outcome. A bullish engulfing pattern, for instance, won't always lead to a bullish trend. However, like other technical indicators, the more popular the formation that you're looking at, the higher the likelihood that other traders out there also look at it and interpret it as the theory suggests, potentially leading to a predicted outcome. It's always the same story. So it's called the self-fulfilling prophecy. Remember, the reason why these technical analysis, these technical indicators work surprisingly well. So I will leave it here and let you go for candle pattern hunting on your trading charts and observe if they have worked out or not. Now, don't forget that the past performances don't guarantee future performances, but it is always a fun exercise to do, and it gives traders and investors an additional context in making decisions, as I said. So, this is all for this special and educative episode of Market Talk. I'm İpek Özkardeşkaya and thank you for joining me for this special episode. I hope this episode of Market Talk has been helpful and it has been insightful to you. So, please do not hesitate to leave your comments, your reactions and your questions below as you do usually. Follow us on Instagram, on X and on LinkedIn for regular market updates if you do not follow us yet, and subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. And please don't hesitate to shout out at us if there are any subjects that you would like us to cover. And until then, goodbye.